Hello guys, Dividend Enjoyer here, and today we're going to be doing a stock analysis video on Nintendo stock. And this video was actually recommended by a subscriber to the channel, Bebop Obama 4686. He says, you should do a video on Nintendo. They seem like an undervalued stock right now. And I said, yeah, I can definitely give them a look. I think they definitely operate in a different ecosystem from Sony and Microsoft. I also think they're probably close to developing their next great console, and I think that would be a great video. Thank you for the idea. So here we are. And if you guys want to see me do a specific type of stock, please drop it in the comments down below. Please leave a like, please subscribe, and without further ado, let's get into the video. The stock is currently up 18.66% year over year, with a 52-week range of $45.22 to $63.97. The 5-year monthly beta is 0.26. The market cap is $70.938 billion. The dividend is 84 cents or 1.38% per year. And the PE ratio is 34.04. Analysts tend to be more bullish on the stock, although there are some that still rate it as a hold, underweight, and sell, as you can see here. But the majority rate it as a buy or overweight currently. Um, I think that the stock is probably slightly undervalued for what it is, and I'm going to get into that later in the video when we do the DCF valuation and just when I talk about the business. I think Nintendo is a special business, but it does have certain complexities if you're wanting to invest in the stock that I'm also going to go over in the video. But overall, I think that the analyst consensus is pretty broad. And pretty solid, I would say, because there's a lot of different outcomes that can happen with Nintendo stock, and I think each of these analysts kind of has a different vision in their head for what can happen. I wanted to kind of talk about the cash flows because there's one obvious huge outlier, and that is the 2021 cash flow. This is all in Japanese yen, by the way, but this cash flow is obviously huge, and the reasoning is actually because during COVID, there were a lot of sales of the Nintendo Switch and different Nintendo games. I don't know if anyone remembers, but Animal Crossing was a huge game that Nintendo released. It was very successful during COVID. Nintendo made a lot of money during COVID, and you can see that that cash flow is disproportionately large. In fact, year over year, from 2021 to 2022, the cash flows actually decreased 53.38% because the 2021 cash flow was just a monster cash flow. And I'm sure that that helped them to, really build up their business. And, I'm sure they were conservative and smart with the money and were able to reinvest it to make more money in the future. So it's awesome when you have a black swan event like that if you're Nintendo. Sucks for the rest of us, but for Nintendo, COVID was the most amazing year they've ever had and maybe ever will have for the foreseeable future, especially if you take into account inflation and everything else. But Nintendo just made a killing off of that. One thing that really shocked me was that Nintendo has sold significantly more units of the Nintendo Switch than Sony has sold PlayStation 5s. Maybe this is because Nintendo just hasn't released a new console in a really long time, but the PlayStation 5 sales are currently at, according to Sony, more than 65 million. So that could be 65 million in one or 65.9 million. We don't know. They just say more than 65 million. And then Nintendo Switch has 146.04 million units of the Nintendo Switch sold. So that's a significantly higher amount, and I was really surprised by that. And I think that's interesting because the hard thing for Nintendo is to get someone on their ecosystem. But once they're on the Nintendo ecosystem, people are going to be willing to pay a lot of money for games. You can see that because they've sold 1,306.1 million units of software from Nintendo's IPs. One other thing that I think is really interesting to highlight when a company like Nintendo versus a company like Microsoft or Sony is that their consoles are very exclusive and they're not the type to just let their games go on PC or any other type of platform. Their games are pretty much mostly exclusives, and Nintendo guards their IPs like crazy. In fact, because the copyright's so strict there too, I'm actually nervous about making this video, and I do not want to include any gameplay footage from anything because I do not want a copyright strike from Nintendo. Um, but they have a lot of strength compared to these other companies, and they're in a very unique position to really win and make money in the long term. And I think that's very interesting to investors to see that, Nintendo kind of has a different sort of thing. The Switch is a very different console from the Xbox, and it's a very different consumer that they're getting. So you're getting less serious gamers, and they're also able to charge more of a premium because of that, because they're the only ones that can offer, Legend of Zelda. They're the only ones that can offer Super Smash Bros. They're the only ones that can offer Animal Crossing, and it makes it so that people have to buy one into the Switch, which is the big money item that they're making the most off of. But then they're also willing to pay $60 because they only bought the Switch to get the Nintendo IPs. So Nintendo has a very good business model compared to some of the other uh, gaming platforms, and I think that they've been able to make a lot of money doing this, and I think they're going to continue to grow as well because it's a very different sort of niche that they're filling than let's like the Xbox or PlayStation consumer. They're servicing a different consumer, and one advantage they really have that's really awesome for them is when the dollar's strong like it is, they're able to convert US dollars that they make here in the US and then trade that in for Japanese yen at a huge premium. So I think Nintendo overall is, a great company. I do think that, it is frustrating sometimes investing in foreign companies. I invested in Restaurant Brands International and I had to pay extra taxes. So you are subject to whatever Japan's rules are trading on their exchange. And it is also different hours. Because I researched it. Maybe there is a way to buy it on the New York Stock Exchange, but I don't see any way to buy it. So I'm guessing you have to go on the Japanese exchange. And yeah, I really think Nintendo is a good company overall, though. I noticed there was no debt on the balance sheet, which was crazy to me. Maybe I'm incorrect, but I looked through the Yahoo Finance stuff. I looked through the Wall Street Journal, and I Googled it, and it said there was no debt on their balance sheet. So they run this company with no debt, and they're making a killing, it looks like. This is the discounted cash flow portion of the video where we value the company, and Nintendo is showing a huge buy according to this model valuation. And the discount rate is 5.208%, and I got that just by using CAPM because, again, they don't have any debt. However, I do think that because they have, certain taxes they have to pay, this should maybe be a little bit higher. So I think that this number could range from where it is now to 6 or 6.5. So I think we should do the most just, conservative estimate of it and just show you guys what the valuation could look like with just my most negative bearish case. So then if it's still undervalued, you know that it's probably a good value according to this model. So let's do a 6.5 here. And you can see with zero growth, it's pretty much close to even. So if it didn't grow at all with our most bullish scenario, or our most bearish scenario, excuse me, of a weighted average cost of capital, the stock is pretty much even. Now, let's say we only grow the cash flow 3% on average. There's 19% upside with our highest weighted average cost of capital. So if we get a 7%, then there's a 55.64% upside. So I'm starting to think my subscriber that recommended this to me is really onto something. And I do think that it is more likely that Nintendo is undervalued. But one thing to be really cautious of is you can see that, from 2023 to 2024, they've grown the free cash flow a lot. And I think that Nintendo just kind of they just have years where sometimes the free cash flow grows a lot, sometimes it doesn't. So I think if you're going to really buy this stock, the way to look at it isn't as analytical. And this might sound cringe. I don't care. I think it's true. You kind of have to look at it as a gamer and as someone who understands the gaming market. And I think to do that, you have to look for when you think Nintendo's offerings are really good, and then you could buy the stock then when you think that Nintendo is offering some really good products that are really going to improve cash flows, and then maybe sell off when they announce something you don't think is going to sell. And you can kind of see that. I mean, the cash flows fluctuate like crazy. The stock is also at the mercy of a lot of different things right now. I think one thing that's really weighing on the stock too is the potential for tariffs. I don't know how serious that's going to be, but you have to keep in mind that this is not a domestic company, so there are all the risks of investing in a foreign company when you buy this stock. But with that being said, I think that it is my non-professional um, opinion that Nintendo's probably undervalued. Again, I'm not a financial advisor, but just looking at these figures, I think that Nintendo's looking like a really good buy from what I'm seeing. Because again, this is on the lower end of my own estimates. And even at a 2.5% annual growth rate, which is like steel company, super mature, low growth cash flow expected from like industrials, this stock has 15% upside from the current price. So, this might be your opportunity if you're interested in it. Thank you so much to Bebop Obama for recommending I review Nintendo stock. And thank you guys so much for watching to the end. If you made it this far, you might as well subscribe and check out my other stock analysis videos. Thank you for watching. Have a great